There we go. Hey everyone, hope you're all doing well. Hope you're all having brilliant, fantastic, amazing days. As always, welcome back to another video. Today I'm going to be breaking down for you all how to use the FX London signals. As of the moment, we have FX Gold and Indices trade channels. Perhaps in the future, we might expand that to commodities, to crypto as well. But as of the moment, it's FX Gold and Indices. And in this video, I kind of wanted just to make a short little video on how to use the signals, okay? Because they're quite self-explanatory. Lots of people have, of course, used signals, paid for signals channels before, perhaps been inside a few free forums as well. But I wanted to basically take my approach and highlight the importance of understanding how to use them, so that you can best maximize the profits from them. For me, as I've always mentioned, the best approach to passing these prop firm challenges is a hybrid approach. Okay, passing prop firms is no easy task. We all know this. FTMO, you've got to make your 10%. My Forex funds, you've got to make your 8%. Most prop firms are wavering between the two. And essentially making 10%, 8% profit in a month is not an easy task, as I've said. So as I've always said, the best strategy that I've found to approaching these prop firms is to take a hybrid approach, okay? To utilize your expert advisors to pacify making profit in the background, and then to also have your manual trades on top to bump up the profit to hit those targets, okay? And this is the same when it's, when you're live. Once you pass the challenge, you pass the verification stage, the best method that I found to maximizing profit is to have some profit that's automated in the background, and then to also, have your manual trades to boost up the profit as well. So if you can have an expert advisor that can make you, that 3, 4, 5%, profit to get you towards that goal on that line, then you can make, 3, 4, 5% manual trading. It takes off the pressure of having to perform manually trading quite as much if you've got an expert advisor there. Okay. And it also means that you don't have to push an expert advisor aggressively and over aggressively to hit 10% profit. Okay. Which is quite tough with a 5% daily drawdown rule. Okay. So overall, that's the importance of the signals. Okay, working hand in hand with the expert advisors. Videos on expert advisors and how to use them, how to attach them to charts, how to optimize them are going to be coming in later videos. But essentially, inside the FX London six-figure program, I want to, make a short little video here to shed and highlight the importance of signals and using them correctly. Okay, so FX London, I have been doing signals alongside the team for 3 years now. Okay, since the early doors of 2020. So March 2020 was really when the signals channel started. It started as one signal channel, an FX London premium channel, but it has since expanded into 3 different channels, as the sheer volume of trades and quality, and we want to hone in on performance on each instrument has changed. So essentially, inside the program, as I've written here on this document, I'm going to be reading this now for you to make sure that I don't mess anything up and miss anything. The signals, channels come with a signal document. Okay, so if you don't want to watch this video, of course, all the information is going to be there as well instead. But essentially, the most important thing with the signals is how to calculate risk, okay, and risk management. Let me drag this Zoom call back into the middle. But essentially, how to calculate risk, okay. And in this, this little Zoom call, video presentation, I'm going to break down for you all, places that you can go to calculate risk. So my FX book is brilliant for that. But at the same time, you can also manually calculate risk. Okay, when you trade lots and you're using typically the same instruments. So on gold, you can work out the value of how many pips you've got your stop loss to how much percentage you want to risk. In the market, it's very easy to calculate that risk. But also, I want to break down for you all how to follow the signals. Okay, so that's kind of the 3 things. The signals document, which is going to break all of this down. The second thing is how to calculate risk with the signals, and then 3, how to follow them the most effectively. Okay, and strategies that you can use to incorporate everything together nicely and profit off them nicely. Okay, so without further ado, let's share my screen. Boom, awesome. Okay, so if you take your way across to my FX book, okay, myfxbook.com, over at the top here, you'll essentially see they have numerous different tools, charts, communities, reviews, brokers, places. It's basically like a trading, an FX trading hub. Really, really good for getting loads of information for free very quickly. But essentially underneath here, okay, they've got FX calculators, and if you click on that, you'll be taken to this screen. You can see they've got loads of different free tools that you can basically use. So currency converters, position size calculators, pip calculators, margin calculators, Fibonacci calculators, pivot point calculators, risk of ruin calculator, compounding calculator, drawdown, leverage, rebate, profit. So essentially, you can use lots and lots of different tools that they have for free. They're really, really brilliant and help traders out massively. So position size calculator. Now, if you don't want to manually figure out how much risk you're taking in the market, this position size calculator is perfect. You put in your currency pair, you put in which currency it is, account size, risk percentage. So on account size, if you're taking a $25,000 challenge, a $50,000 challenge, a $100,000 challenge, a $200,000 challenge, you put that in there. Okay, so 200K, 100K. Risk. If you want to risk 0.5, 1%, you can also swap it with money. So if you want to risk, $500 a trade, $1,000 a trade, you can do that. With the signals, basically, I recommend taking between 0.5% and 1%. So either one of the two. Some people would choose 2%, but that's a lot more aggressive. You certainly don't want to go down 2%, on your first trade, but perhaps taking a few 0.5% trades. Once you've got a little bit of a buffer, you've got a 1 or 2% buffer alongside the expert advisor, then you can increase the risk. That's certainly an approach lots of people do take. But here you can insert the percentage that you want to risk, the size of your stop losses, and then basically you calculate it and you'll get given the lot size that you want to be using. Okay, so that's one way of doing a position size, working out how much you want to risk lot size wise, but how much you want to risk in percentage wise. So really, really good. At the same time, you can also work out the risk manually. So for instance, if you're trading gold, so xauusd, okay, you've got 100 pips stop loss, okay, and you're risking one lot. Okay, you know that 100 pip stop loss is going to be, $1,000. Okay, so for me, on an $100,000 account, if I'm taking a $100,000 challenge, I have a daily drawdown limit of $5,000. I will risk 1% per trade and per signal that I post into the community group chat channels. So I know that if I have, a 100 pip stop loss, okay, I need to risk, one lot. Okay, and that's how much risk I can allocate towards the trade. Okay, if I have a 50 pip stop loss, I know that it's a two lot. Okay, two lot position trade. Okay, and you can work it out manually like that, quite quickly. Especially when you're trading the same instruments multiple times over. You're going to be typically using the same sort of size stop loss. So for me, it tends to be between 50 and 100 pips. Okay, so there you have it. There's two different ways to manage the risk. One which is more manual, which will come over time. It will come with a little bit of experience, but you'll be able to figure it out inside your head. How much you need to be risking in terms of lot sizes for a certain percentage risk on a trade. Okay, and then the second is of course using the MyFX book, position size calculator, as I've just gone through. If you're a little bit more of a beginner, you're a little bit more hesitant to calculating it yourself, go on there. It's fairly quick, it's fairly straightforward, how to use it and calculate the position sizing. But essentially, over time, with a little bit more experience, you'll be able to do it in your head a lot faster than you'll be able to input into the the position size calculator. So there we go. There we have it. I hope you've enjoyed the video. I hope this has made sense. As always, if you've got any questions and I think you need clarifying, feel free to reach out to me. As always, I'm always here and available to answer the questions. But hopefully this should really, discuss and uncover the importance of utilizing the signals in the right way. Because, calculating the risk is one of the most important things when it comes down to taking manual trades. And as I've mentioned before, the success of the signals is brilliant. Okay, and they're working really, really nicely so far, but they're not 100%. And so you can't be YOLOing trades, maxing out, lot sizes and position sizing on the trades, without calculating the risk. Because once you do get those one or two trades that don't work out, okay, within a cycle of a month, you can really mess up your progress by doing that. So ultimately, I hope you've enjoyed the video. Discussing the signals and how to calculate risk the best way. And moving on to the next video, I'm going to be discussing, what am I going to be discussing? I'm going to be discussing why documenting is so important. Okay, showing you some of the trade reports from the signals channels, and to how best to maximize your progress by documenting the trades that you take. Okay, and also why I document the trades that I take. So I hope you've enjoyed the video. I'm going to see you in the next video for now, but otherwise have a brilliant rest of your day, and I'll see you in the next video. Bye for now.